Hmm? Mr. Benson, I don't mind volunteering to be a co-host.
What's your name? What's your name? Let me make you right.
My name is Adele Adeshu.
I mean your webinar name.
Yeah, Adele Adeshu.
Okay. Can you just raise your hand? Raise your hand so I'll be able to, so your name can come up.
Yeah, now just raised.
Okay, at this yeah. Okay.
Clownish behavior. That
So
time they talk about anonymous. This guy just printing whole this thing, the whole Twitter name and everything to anonymous. He post rubbish. So like the kind of man, like the kind of
so
man
you
name be.
want to help us like coordinate the meeting, make sure everyone is muted, and make sure you admit people in because there's sort of like a waiting room where they have to wait a couple of minutes before they get admitted. I'm sure you understand what I'm saying.
Yes. Yeah, I understand. Okay,
So
continue.
just go ahead and do that now.
All right.
And you're also supposed to coordinate the question.
Okay, sorry, just a minute. Yeah, Mr. Benson. So I muted everybody and then I muted you.
Okay, I'm good.
Hello. Keep speaking here.
Yeah, nice to have you guys. Nice to have you. I like us all to turn on our camera. I like us all to turn on our camera. I think you all can hear me and you all can see me too.
Hello.
Yeah, Mr. Desu, there are a whole lot of people waiting in the waiting room. Please kindly admit them in.
Yes, I'm admitting them in.
Just click on admit all. That's the fastest way to do that. Admit all.
Yes, done.
Yeah, so I'll just leave that space now while I focus on people that are right here. So we currently have 160 people on the call right now. And that's a fantastic thing. It's a phenomenal thing. It's just about like 1 minute to 1. It's exactly 1 p.m. time, which is Nigeria time. So it should be 7 a.m. Eastern time and 12 p.m. UK time. So nice to have you all here. So the next thing I just want us to go straight to is make sure you just enable your video. Let me see people I'm talking with, enable your video. Mandy, you want to enable your video. Adele Khan, our co-host, enable your video. Joshua, just enable. Soji, enable, and too many other guys who are on here. It's fine if you don't want to enable, maybe probably in a busy place and all of those stuff. Make sure you enable your video and have your mic muted, please. All right. Yeah, it's really been a very busy year, and I'm really very super excited like to have this whole journey with you guys. And the reason why I'm having this last webinar was because I promised this before I started the exclusive webinar with Jeffrey Benson, which cost $50. So I'm just like doing this one to go through questions that we may have, or maybe there may be service you probably would need in the coming year 2021. I may consider adding that into one of our services that's going to be coming out. And also, I'm also going to be teaching you on this webinar. I'm also basically just to answer questions, to network, and also teaching you maybe anything you want to know. There's a whole lot of question on how I add more position, which is stacking that I always talk about. How do I master one pair? How I draw, how I plot the psychological levels, and so many other very important questions that are relating to forex market and consistency and psychology that will also be one I'll be touching on today. All right, so without further ado, I would like us all to introduce ourselves. By dropping your location on the chat. For me, I'm in Lagos, Nigeria. So drop your location on the chat box where you're joining us from right now, because we currently have 181 person on this call. So drop where you're in from the chat, on the chat. Right. Wow. It's fantastic. We have Accra, we have London, we have Soji from Nigeria, we have Abia, Abuja, Ughelli, Shanghai, we have Russia. Yeah, we have Bermuda, Cameroon, we have Chicago, we have UK, we have USA, London, Lagos, Surulere, we have Toronto, Canada, we have New York, we have what I call River State, Nigeria, Jamaica, Somali, South Africa, India, China, Saudi Arabia, Ghana, Lagos, and a lot more. We also have South Korea here, from Port Harcourt, Berlin, Russia, Kenya, Nigeria, Jalingo, phenomenal. So nice to have you all here for Uganda, Greece, where else? Pakistan. We have a whole lot of people from Abuja. Tina from Abuja, nice to have you here. Kenya, from Oshogo, that's Moscow. Yeah. So I'm super excited to have you all here. There's still a whole lot of them coming in Mozambique, London. Nice to have you guys. Nice to have you guys. You guys rock. So thank you guys for sticking around on the group and making sure that one thing I just want to ensure that we attain or achieve this year is that we have sorry, Mr. Adesi, like the admitting process is somehow slow. I don't know why. Can you just speed it up a little? It's somehow slow because there are a whole lot of persons waiting in the waiting room, and it shouldn't be so. All right, so just click on admit all to admit people. All right, fantastic. So, so basic thing, first thing first, I want to say thank you guys for the support on the channel. When I mean channel, I mean Telegram channel, YouTube channel, for the growth, for the support. Each time I drop a video, you always come over to show some love, dropping a like button, every comment, every subscribe button, all I've seen everything. And I want to say thank you guys for the large support, and I'm super excited about all of those things. Some people, no matter how hard you try to do things, some people still want to like dislike. It's still a very good thing. That's like a feedback for me to go work harder on some part where I need to work hard on. All right, so without further ado, since we have introduced ourselves, you all, just in case, for if you're joining us for the first time, you don't know who I am. I'm Jeff Benson. I founder of Fire Pips. All I just want to do is to train people who will be proprietary traders, people who will be able to like trade money and not lose it. Consistent trader, trade for huge firms. I want to be proprietary trader. You can be a bank trader. You can be trading for Wolf of Wall Street. Yeah, that's just the dream. And we are getting there. I've gotten a lot. I had a message of recent guy telling me that he got admitted by a very huge firm in the United States. It's not a popular firm, so I don't really want to mention the name. It's a very close firm. So he said he got admitted into trading. It's one of the guys that I trained. So into trading for a very huge firm in the United States. And I'm like, yeah, that's the goal. That's the dream. It's very, very possible to us all. So that's what I'm here today to just preach. All right. So, and you can use any strategy to attain any of these things. You can use any strategy, no matter the strategy you are currently using. I'm not going to encourage you to leave yours for mine. No, just know that any strategy you are using only need a little bit of polishing. Once you polish it with proper risk management, proper money management, trade management, and have a good psychology, trade psychology, trust me, you will be fine. That's just what I'm here to preach to you all today. All right, so without further ado, let me go ahead and share my screen. And if you have any question, you can drop that in the chat box. Sorry?
Yeah, sorry to interrupt you, Mr. Benson. I got logged out when I tried to start my video, so I don't have access to the waiting room to let people in anymore.
Okay, just raise your hand again. Let me make you the co-host again.
All right, we'll do that.
No wonder I found that difficult. Like there were at some point there were about more than 25 persons on the waiting room.
Yes. I got logged out. That's what happened. So I'm back.
All right, fantastic.
Okay, yeah, I can see them now.
Yeah, right. Yeah, we're good to go now. So you can take it away. Keep admitting in people that come in. We're going to start admitting from now till 1:30. Keep admitting in people. Past 1:30, I'm going to lock the room. I'm going to lock this Zoom meeting. We're currently at 206, 209. in the room, keep admitting. Once it's 30, draw my attention to that. Unlock.
Yeah, they go. Hey, true,
Okay.
Kindly mute everyone. Anyone that is just coming in, mute everyone.
Yeah, so I've put it on mute all, and you can't unmute yourself except if I unmute the person. So I'll mute myself now, so you'll be the only one to have access to the audio.
Oh, fantastic. All right. So without further ado, this is what I currently have on my screen. First, I'll just go ahead and explain how psychological levels work, what I do, how I do my normal trading. Then from there, we should be able to take some other questions because I can see the chat room already buzzing with a lot of questions. My God. So if writing on the screen, please kindly stop that. I don't know, I don't have idea where that's coming from. Just stop writing on the screen, please. Let me see if there's a way to do that. All right, so we are good. Now, so on psychological levels, I've gotten a lot of questions about that too. So psychological levels are round up numbers that banks hedges, they pay attention to them. All right. So why do they work? Psychological levels work because they are levels that of demand and supply. So whenever price gets to these levels, it reacts. Wow, who is this guy drawing things on the screen? Like, yeah, stop it. Okay, you know what? Anybody that draws stuff on the screen, just tell the person and let the person go. It's really disrupting this meeting.
Is this your trailer number?
Oh my God. Just a second. Yeah, now I'm back. So psychological levels, as I was saying earlier, they are round up numbers that banks hedges, they pay attention to. So the reason why they pay attention to them because they are whole numbers. Like, for example, 5, 10, 15, 20, 25, 30, 35, 40, 45, like that. So if you notice, the difference between all of these numbers are 5, 5, 5, 5. Whereas in real time on chart, the difference is 50, 50 pips each. So the reason why this stuff work is just psychological. All right, it's just psychological. Like, for example, whenever you go to a car dealership shop, yes, you want to shop a car and you are being told the price. Let's say, for example, the guy tells you that, oh, for you to get this car is about 1.5 million. You probably want to negotiate to about 1.2 million, or just even $1 million, stuff like that. So that's the idea behind it. So every human being wants a better price. So you want to wait for price at a more better price, where banks, hedges, the bigger guys, the speculators are also waiting for prices. So that's why psychological level works. So if you understand what I mean by psychological level, just drop number 1 on the chat box, just to know that we are following along before I go too far. Great, fantastic. So now I just want to pull up a plain chart and drop psychological level. Now I'm going to do that on GBP USD because that's the pair that I trade. And I also want to go ahead and do it on one more extra pair, just so you guys understand better. So it doesn't seem as if it's just on GBP USD. All right, then I'm doing this stuff. It works on all pairs, across all pairs. I'm going to do it on gold. I'm also going to do it on USD JPY. I'm also going to do it on what is that pair? Just suggest one more pair. Suggest one more pair on the chart box. Then I'll go with that on GJ. All right. All right, thank you, man. So let me just go ahead. Someone just suggested something that I should disable something that will not allow people, that will not allow persons to mark up the chart. I believe that should work. Thanks, man. So let me put a plain chart on the screen. So here is a plain chart on GBP USD. Let me delete this one I have before. Someone is still doing it. Someone is still writing. Like, why? Just a second. Let me figure out this person who is writing and keep the person. Which one is looking?
Mr. Benson, there was some instruction dropped on how we could stop someone
I've done that
from
already.
using
I just tried again. I've enabled all and I've disabled all annotation for others. Yeah, thanks. Thanks. Yeah, so this one. So just let me go ahead again and bring up GBP USD. So I'm just going to mark up the psychological levels on this chart, apply a plain chart and all of that. So it's best you do it on 1 hour time frame, or you can do it any time frame. It's just basically the same number. You can do it on any time frame, but the reason why I'm saying do it on 1 hour time frame is because of the spacing. So you have access to more spacing when you do it on a more tighter time frame. So I'll just go ahead and start marking up right now. So the first thing you want to do, the first rule to marking up psychological level is look at the current price. What is the current price of GBP USD? The current price is 1.36087. So the nearest whole number, that's what you should ask yourself. What is the nearest whole number? And the nearest whole number should be 1.36000. All right. So anything 0, so I'm going to pick up the horizontal tool right here and drop here. Double click on the horizontal line, go to horizontal line properties to edit, and I'm going to put that in manually, just like this. So that's the psychological level. So to get the other ones, you have to add 50 pips to the downside or to the upside. So from here to here, the next one should be 1.355, 1.35500, like that. So to cross-check whether you're correct, just enable your crosshair on your laptop by pressing Ctrl F, and you measure from here to here. It must be 50 pips difference. So you notice that that's 50 pips. So you're correct. So in order for you to add more, just as I have on this one, to add more, you just keep on adding 50. So from 1.3600, you keep adding 50 pips. That should be 1.365. The next one should be 1.3700, 1.375, like that. So I'll just go ahead and do that without talking. All right. So we'll be fast with it. Now, it's not compulsory you add a lot of them to your chart. Just add as much as you know it's relevant to your chart. So do not have your chart messed up with all of that. But however, if you want it to be all around your chart, it's fine, just based on your personal preference. So I believe you are understanding how I'm doing this. So just to add 50 pips different. I just want to add a little bit more to the downside and relate it to the current price. So we see how it affects our charts. So this is it on psychological levels. They are very straightforward and very simple to use. So when I have this set up on my chart, I no longer just bother myself looking at, oh, what's the support and resistance, where's the noise, because I just focus on all of these levels. And that's the reason behind me always catching 50 pips, because the distance from one to the other one is 50 pips. So I always want to wait from one point to the other. Like for example, you saw when price got to 1.36000 at this point, this happened, let's say like last week. Should it? Yeah. Last week, saw how price neatly touched this zone and it dropped right there. So this is what is happening right here. So from here, it dropped to this one, to this next psychological level. That's 50 pip move. So upon this 50 pip move, that's 50 pip most people barely even get in a day. That's 50 pip most people barely get in a day, right? So upon this 50 pip move, it had a retracement to the upside. It dropped some more, 100 pip, drop some more to 150 pips. So that's how you keep catching it from one level to the other. So you can just move back and back test all I'm just telling you and see how it's neatly, our prices, when our price touches these levels, how it reacts. Let me just drop one more to the downside, which is 1.32000. So I believe someone is understanding what I'm saying here. See, when price got here, upon this weak rejection, it moved up. So this is how I sometimes get my sniper entries. Yeah, so like that. So when price touches this level, went up, see this point, got here, resisted, came back here, all of that stuff. So you could just go ahead and keep back testing. So these prices act as levels of cage, like caging price, stuff like that. So you may want to look at it that way too. So if you understand what I'm trying to say, just let me know on the chat box. Just drop number 1 again. Yeah, fire stuff, man. Yeah, I love that. Now someone is asking, he's saying, Jeff, does that mean that you do not take personal support and resistance or swing guys and lows into consideration? Yeah, I don't. This is a support and resistance for me on its own. This support and resistance for me on its own. So once I have this set up on my chart, I'm good to go. He said he doesn't understand counting. Now here, let me just recap. Psychological levels are random numbers like 5, 10, 15, 20, 25. Now, if you notice this number, I just got 5, 10, 15, 20. If you notice the difference is 5, right? Whereas relating to Forex chart is going to be based on the current price, based on the price that we have on the pair. You know, the price on GBP USD is different from the price on GJ, different from the price on GM, different from the price on GCAP. So on GBP USD, first we have to look on the secret is first look at the current price of the pair. So currently on GBP USD, we have 1.3554 something thereabout. All right. So we have to look for the nearest whole number. So when we looked at the nearest whole number, it's 1.36000. So we start adding 50 pips difference. For us to get the one beneath it, we have to minus 50 pips. For us to get the one above it, we have to get 50 pips. For example, so on here, I'll just do that's Control F. From here to this point, that's 50 pips. Yeah. From this other point, from this point right here to this next point, that's 50 pips. So that's how to cross check whether you're correct. So the basic thing is what I was just doing is I started with 1.36000. So adding it down, I have to start removing 50 pips. So coming down, I have to be 1.35500, coming down 1.35000, coming down 1.34500, 1.3400, 1. Like that. That's how it works. So I believe that makes sense now. All right, great. So now, the next one I want to look at is GBP JPY. So let's go ahead and bring up GBP JPY. I'll just take the questions when I'm done with my presentation. I believe that's better. I'll pretty much just do the same thing, just as I've done on my GBP USD. So here is the end. So I brought it on 1 hour time frame. I make sure everything is plain and chart is looking very fine and neat. Great. And we all know the way the positioning of positioning of JPY pairs is very different from all other pairs. And GBP JPY, you can see we have 3 whole numbers as opposed to GBP USD where we have just 1 whole number. So on GBP JPY, we currently have 140.151. That's its current price. So that's the first thing you have to look at. So now where would our psychological level be? We have to look out for the nearest whole number. So the first nearest whole number is going to be 1.340000. That's our first whole number. So I'm going to cancel all of these things and bring it here. So these are psychological level, 1.40.0000. That's a psychological level. Now to know the next one, we have to like click on our crosshair and calculate 50 pips upward. So the 50 pip upward from that level is 140.500. All right. So just take up the horizontal line again, come on here and edit. So you notice it's pretty simple how to spot all of these things. Pretty simple. Although there's an indicator that can help you do this, but I don't like to have indicators, a lot of indicators on my laptop. So that's the reason why I just love doing it manually, because it's not even hard. And it's like more of a thing of fun for me. So that's why I do it manually. And I'm teaching people to do the same thing manually. So let me just add about 3 more to the upside and add a lot to the downside, because there are more of candles on the downside than upside. So that's the reason I'm making that decision. So the next level is going to be 141.00. It did. If this is making sense, drop number 1 on the chat box. Fantastic. It's going to be 139.500.5. Next is going to be just 139. $138,500. This is just going to be 138, like that. So I believe you understand the concept behind all these things that I'm doing. Now let's check the relevance to the current price. So you notice when price got here, it dropped down 100 pips to this side, 1.39500. From on here, it went up 50 pips to 140.000. From on here, it moved. It's kind of trying to like bounce off at 140.500, like that. So you can just go back test all of this as I'm telling you, find out that they all make sense. They are acting as levels. All right. So even there are times that it will miss your entries. It may just miss it with a pip or two. Yeah, because of spreader sometimes. But normally I don't do pending orders. I just execute my trades automatically. All right. So that's that on GBP USD. So the next pair I want to go through is on gold. So go ahead and search XAU USD. I know people love gold. I'm wondering why they love gold. I still can't find the reason why they love gold that much. And gold take most of their money. Yeah, so here on gold, the first thing we're also going to do, I'm going to repeat the same process basically. So on gold, the current price is 1,879.62. So we're just going to look for the nearest whole number. That's just it. Nearest whole number is obviously 1 point. Let's look for these, like, yeah. So I'm going to calculate 50 pip upward, which is going to give us 1,885, because gold is highly volatile. Maybe the major reason why people also love it because of the volatility. Small move on the 0.01 is a lot. But it's also going against you. It's also the same concept. 1,890, like that. So that's how psychological levels work. I'll add a lot of them on gold. So this strategy works like crazy. If you actually stay with this strategy, I can hear someone saying in my heart, I hear someone saying, okay, how does this even make sense? How can I make money off of this? Now, if you can stay with just one pair, monitoring this level, back testing, I'm not saying you should just trade one pair just as I do. It's not compulsory. You have your own decision to make. But if you stay with just gold, for example, now, I'm just going to show you something real quick, how to go about this. Stay with this pair, monitor back testing using trading view playback function. It's a premium function though, so it's best. I prefer using trading view backtesting function than doing it with a software on MetaTrader 4, because it actually puts me on the emotion that I probably would have faced if I was in the current market condition when that candle was printing. Okay, at least it makes me closer. It may not be as real as the real market, because you probably know how the whole thing played out. Maybe it was an uptrend. You already knew that this stuff was an uptrend, or at least it will give you a sense of tension.
Sorry to interrupt, Mr. Benson. It's already 1:31.
All right, great, thanks.
Yes.
I'm gonna lock out. I'm gonna lock the room now. It's 1:31. So we currently have 232 persons on the room. So it's locked. All right. So we have on the psychological levels on gold, we currently have 1,875. The next one, 1,870. Then the next one should be 1,665. Like that. I believe you understand the gist so far. Let me just add some more, because gold is really volatile. I want us to backtest using this gold as an example. Although I don't trade gold, but just so you guys know, it works on all pairs. It works on all pairs. Yeah, so I believe if you do not learn anything today, make sure you take this away. Take this away on how to plot it. So the first trick is look at the current price. The next thing, pick up your horizontal line and start with the first closest whole number. First closest whole number. Yeah. So without further ado, let's look at how gold neatly respected all of these levels. So you can see this price touching 1905, yeah. From this point, it dropped crazily to the downside. You can see how price also touched 1900 and it dropped crazily. So how price touched 1895, dropped crazily, and you saw how price just of recent neatly reversed at 1885. Crazy, yeah. So that's some stuff that you should just be paying attention to daily. This style is also very good with scalping. You can use it as a day trader, you can use it as a swing trader, and you can also use it in a ranging market. Yeah, it's very, very effective. Like if I pull up a chart on GBP AUD, you're going to see how very sweet these psychological levels work on GBP AUD, because most of the time GBP AUD is found on the range, but once it breaks out, the breakout is always very, very interesting. So you can use this on a training market, in a consolidating market, in any kind of market condition. So now, how do you make trades out of this? Now, whenever price gets to your level or any psychological level, for example, as it got to this point at 1905, you have to wait for candlestick reaction. Wait for candlestick reaction on 15 minutes as a day trader, because I'm a day trader. So you wait for candlestick reaction on 15 minutes. So that's why I drop a vertical line there, so I'll be able to recognize it when I downsize it to a smaller time frame. Yeah, wait for a candlestick reaction right here. Then this is a bearish engulfing. If you may call it, you can call it railway track, whatever it is. But whenever I see this stuff right here, something like this on the psychological level, not just on anywhere, on the psychological level, then that signals a trade for me. As a matter of fact, I should be getting in right here. Once I see it comes here, there's some exhaustion. There's a way candle is going to behave. Like for example, this one, there's a behavior that I'm seeing right here. This one, I see a behavior right here. I will just go ahead and shoot. Yeah, I'll shoot at this point. Have a sniping entry here, and I'll write it down. Most of the time, I averagely target 50 pips. On the average, I target 50 pips. Whereas there are days that are really, really good. I can have 200 pips, 150 pips, and even 100 pips. But that 50 pip move, I make sure I maximize the move. That is what's very important. So many persons just trade 10 pip move. Catching 10 pip for some people means $10,000. Sometimes, some people it means 100,000. Some it's even 1,000. Some it's $100, depending on their account balance and depending on their understanding of risk and risk management. So it just depends. It varies. So you would want to make sure, just as much as you have a very good and interesting, fantastic strategy, you also need to understand how to maximize move. Okay, how to maximize any move that comes, any opportunity that you have, even if it's just 50 pip move, even if it's 30 pip or 20 pip or what have you, stuff like that. So I believe that's that on psychological level. Is there any question regarding psychological levels? Now the chat is open. I'm reading chats. All right, Clinton is asking a very important question. Say, Jeff, what if price does not reach the next psychological level? Do you scale out as price goes, or you trail your stop loss just in case price retraces? Yes, I trust much as possible. As price is moving in my favor, I trust much as possible to break even. In fact, the first thing, I can see 3 participants raising their hands. I'm going to meet you very soon, just to give me a few minutes. The first thing I look out for whenever I'm in a trade, that's trade management. You are delving into trade management, you're living strategy already. So the first thing I want to do is, first, I break even once I'm in 20 pip profit. Because first, as a very good trader, also a proprietary trader, you are expected to protect your capital. So breaking even is a way of protecting your capital that you come in market. First, try to run risk-free. All right. So that's the first thing I do each time I'm in a trade. So as you keep moving, or if it doesn't get to that point, based on candlestick reaction, I'm going to hop out. So that's the thing that I do. So maybe when you come on a one-on-one exclusive webinar, I definitely would want to be delving into what are the things I exactly look at. All right. So Mandy, over to you. You can ask a question. I've unmuted you.
Okay. Good afternoon.
Yeah, good afternoon.
Yes, okay. My question is
Sorry,
this.
what's
I
your
want
name?
to
Where are you
ask,
calling in from?
Mandy. Mandy is my name from Lagos, Lagos,
Okay,
Nigeria.
fantastic.
Okay, thank you so much. Please, my question is this. Does these psychological levels work on volatility index or just currencies? Then, okay, let me just ask one. Let me ask him. Thank you.
Okay, great. Nice question. Please kindly help us to mute. Okay, great. You already did that. Yes, it does work for any currency pair, any pair, whether stocks, whether VIX, that's volatilities, whether commodities, whether cryptos, it works. It's just psychological that everyone wants to buy at the round up price because banks hedges, they're also waiting for that price. Imagine people's prediction. They're expecting price. I can see somebody, sorry, Mr. Desui, can you still keep admitting people? Because there are other persons on my chat on Telegram begging for entry. Let's give more grace to allow more people to come on. Because there are some people that join in at first, maybe their network or something, they left and they have to join in because the group was locked, they couldn't join in. Thank you. So,
Yeah, I'm seeing in the waiting room. I'm admitting them now.
all right, great. So it's just psychological. Now imagine Bitcoin hit at when Bitcoin was 16,000, a lot of persons were predicting it's going to get to 20,000. So now it's currently at 20,000. When it was at 20, it went to 21, 22. A whole lot of people were speculating it's going to get to 25,000. So once it gets to 25,000, if it breaks support, if it breaks the resistance and retest, I'm going to buy. Yeah. So once it's currently at about 27,730. So most people are also speculating that it's going to get to 30,000. So that's just it. A lot of persons are waiting that once you get to 30,000, I'm going to go short. Once you get to 35,000, I'm going to go short. If it's able to break above 30,000 and retreat and retest, I'm going to go long. It's just something psychological. So you just have to know how it works. The way it works on GBP USD may not be the same way it's going to work on volatility 75. So that's why backtesting is very, very important. You have to backtest it, see how it reacted last week, see how it's been reacting last month, last year, like that and like that. So that will give you a hint on how it probably would react in upcoming time. All right. So I believe that has been answered. So the next person, you've been unmuted. Tell us your name and where you're calling from. All right, so seeing that person is not on there, so just to be on the faster lane, you have been unmuted, Henry. Henry, are you there?
Yes, I am. Can you hear me, please?
Yeah, I can hear you. Go ahead.
Okay. Good afternoon, everybody. My name is Henry, and I've joined this call from Lagos, Bogije, precisely Bogije, here in Lagos, Nigeria. Okay, I just wanted to ask a question. Yes, I didn't join at exactly 1 o'clock. But I wanted to ask a question now. On this chart, the gold USD chart. Now, the first psychological number you selected was the one closest to the price, which was 1880.00.
Correct.
Now, if we add 50 pips to that, it doesn't. I don't know how you came about the 180. That's the next psychological level, 1885.00.
Okay, now let's do that together. Just to watch my screen. So from here to this point, how many pips is that?
That's 49. That's 505.
That's 50 pips. Can you see this? That's 50 pips. You don't count the last one. The last one is pipped.
Okay.
Yeah, so it's 50. That's 50 pips.
Okay.
Here to this point, that's 50 pips too. Yeah, that's 50 pips. You don't count the last one. The last one is pipped. All right. So is that fair?
Yeah, that's the question I wanted to ask. Okay.
Kindly mute. Thank you. So
thank you.
Yeah, I just asked you to mute. Mulero, you can go ahead, ask a question.
Oh, can you hear me?
I can hear you clearly.
Okay, good afternoon. My name is Mulero. I'm in Benin Republic right now.
Okay, nice. Nice to have you.
Okay, so my question is, when the price reacts at the psychological level and you see a candlestick pattern, what do you wait for to decide whether or not you're going to make a second entry? Or do you make all your next entries at the same level?
Okay, great, fantastic. Yeah, the question is asking is whenever price gets to my psychological levels and I see candle reaction that is telling me, okay, go short or go long, what do I look at? Do I have all my entries at the same times or different levels? I have my entries at different times. It's not definitely not the same time. So the one thing I always want to do, I make sure the risk I'm having on one particular trade will not break my account. What I mean by it will not break my account, I make sure on FTMO I reach 0.5%. So that 0.5% is what I'm going to go in first. So as price keep moving in my favor, I keep on adding more position based on how price reacts at these levels. For example, let's say I go short at this point. All right. So when price start making noise here, I see, oh, price have a high chance of continuing to downside. Probably may have more other positions right here. All right. So and I'll keep on riding it to the downside. So that's how it works.
Okay,
on
thank you.
live session, you get to see me trade live. You get to see me do all of these things I'm saying live. It's not just explaining. I will explain and I will demonstrate to you. All right. But market is really choppy right now. You'll notice how GBP USD moved all through yesterday. GBP USD never made more than 50 pip movement yesterday. If you notice, let me show you. Like yesterday, it was ranging from on here, from this level, from all this level to here. That was GBP USD move yesterday. It was really frustrating. Some people buy because of this trend line bounce, they'll sell again. Oh, it's a breakout, they'll buy and keep selling like that. A lot of people are just losing money here and there. And the best decision right now, because it's holiday period, just stay clear of the market.
So the choppiness reduces after the holiday period, right?
Of course, yeah.
Okay. Okay, thank you.
Yeah, great. Please can you help us to mute? So who's the next? Let me just have one more person, then I move. Joy, you can talk now.
Good afternoon.
Yeah, good afternoon, bro.
Good afternoon. My question is, how do you use the psychology level with the candlestick pattern, and how do you use the TDI indicator to confirm them?
Okay, to confirm all of
because most of the time because whenever I see your chart like this, I'll see this indicator, a lot of lines on it, and I don't know how each lines react and give you the direction to trade to maybe buy or sell. How do you use it to ride the market?
All right, so you're asking two questions. How do I look at candlesticks on these levels, and how do I use a TDI? Now, first, TDI is Trader Dynamic Index. It's an indicator that I love to use only on 15 minutes as a entry confirmation. Now, it's not important you have this TDI, but if you want it, it's on our discussion group. Just check the file session. You're going to find this file to have it installed just as I have it on my laptop. And if you also want mobile,
I've this TDI, how to add it. I've done that, but how to use it is my
great. I'm coming there.
Is the main,
If you don't mind, kindly mute and I'll answer all the questions. So just for people that are having this similar question, that's why I'm going through all of this route. Now, if you also want it on your mobile, the instruction on how to set it up on your mobile is also included there. You may want to check it out on the discussion group, or however, I may want to repost it after this our webinar. So the first thing that you want to do is understand how your indicators work. It's not compulsory to use this one. You can even have an RSI, you can have stochastic, you could have MACD, moving average combined divergence. You can have any indicator. They all work perfectly well. But the reason why I settle with Traders Dynamic Index is because I've worked with it for a very long while and understand how it moves. I understand the problem that it has, I understand the lagging, I understand the leading, I understand all the moves. So that's the reason why I'm using it. So if you already have one that works well for you, do not switch. Great, I believe that is understood. Now, this first one, this blue line you see is volatility band. This green is what we call sentimental line. The red is price line, while this faint yellow line is what we call MBL, market baseline. So basically, how I use this is just for entry confirmation. Upon the cross, if the green is greater than the red, that signals a buy entry for me when I'm at a critical zone. For example, let's say when price was at yesterday, I was long on this at this point. I was long. I had a lot of orders here. I don't think if I screenshotted it, let me check it out. So I send it to you guys. See what I'm saying? No, I don't have a screenshot of that. So I was here. So why did I have my entries right here? I have an entry, one entry here, another one here, and another one here. That was my entry on this pair because I wasn't really wanting to put in much because I know the market was really choppy and it was about to close. This was the beginning of Asian session. If you notice, if you follow this market, it was the beginning of Asian session from on here down. Yeah. So is it Asian or yeah, beginning of Asian session. So, and this was the next day. Yeah. So what I looked out for was I want on 15 minutes time frame, I want first see price reaction, reacting to the zone where I want it to react. So when price got to 1.34500, 1.34500 year psychological level, I was watching for reaction. So you can see candlesticks reaction, rejection, rejected, rejected, rejected. And what did the TDI do? The TDI was the sentimental line, which is the green line, was greater than the price line, which is the red one. So that signals weakness of the sellers. And also my structure also make me to understand that we're in an uptrend from this point. So this is a trend line that I was expecting price to come touch again. So upon this level, I was expecting price to get here and drop a little and move up. So, and that happened because in a trend line, we can only have, on average, we have 3 touches on a trend line. So this is the first touch, this is the second touch, this is a third touch. Upon the fourth one, is definitely going to be a breakout on the average. There are times that we have 5 touches, there are times we have 4 touches, but on the average, it's more common that we have 3 touches. So I believe, let me stop there so that other people can have their questions. So let me just take more questions on the chat box. So basically the concept of the TDI is for entry for me. I just use it for entry. So on 1 hour time frame, I definitely will not, I'm not going to be using TDI. On 4 hour time frame, I'm not going to be using the TDI. So I'm basically teaching you guys what I taught those guys that came on the paid session, exclusive session, because it's no secret. So the paid session is still going to be open for next, it's going to be open January after the holiday. All right. So if you just want to like have a place where you want to meet like-minded people who are successful and are trading, or you also want to see how I'm placing my trade, that's the need for that exclusive webinar. So if you already have stuff that work for you, may not necessarily want to come on. All right. It's not something that is a must. You just want to see me trade, you want to see what I do live, and not just explain just as I do on YouTube. You see me do it live. All right. So that's the essence of the upcoming sessions that's going to be coming in January. So you can search this up on YouTube on how to use it. TDI simply means Traders Dynamic Index. So you can just search it up on YouTube if you want to find more information about this indicator. The reason why I'm not talking a lot about this indicator, I understand a lot of persons detest the use of an indicator. So that's why I'm not talking about it. Yeah, a lot of persons, they don't like the indicator. So you can just go do your due diligence on YouTube, search it up, and you will get that stuff. So these indicators are obviously self-explanatory, right? So another very important thing I want you guys to understand is whenever you open up any chart, now I switched back to GBP JPY. Of course, you know, I don't trade it. That's something I'm going to be trading. I'm just using to explain that any of these concepts will work. It doesn't just work on my pair. It works on all pairs. So come back to GBP JPY. How would you react to this current market price? What will I do? How will I present myself in this? What will I do? What will be my position on this market? My position on GBP JPY, first, for me to determine my position, I have to check what is the higher time frame doing. What is my main trend doing? First, as a day trader, my main trend is 4 hour time frame. That's where I pick my main trend from as a day trader. But however, I'll still do my top-down analysis from monthly, weekly, daily. That's what I do on none. Before I open any pair, I'll first do my top-down analysis from monthly, weekly, daily, 4 hour, and even up to the 1 minute time frame. That doesn't mean I'm going to be picking my entries from 1 minute. No, it's just for me to know where is price heading to, for me to just be able to speculate and have an open mind from all time frame perspective. All right, I believe that makes sense. So as a day trader, you may want to write this down. It's very important. As a day trader, let me enable my camera so you see what I'm doing. Camera is lagging something like that. As a day trader, you want to pick your entries from the 4-hour time frame. 4-hour time frame. Pick your current entry. You want to pick your current main trend from 4-hour time frame as a day trader. Pick your current time frame from 1-hour time frame, and you have your entries on your 15 minutes. That's as a day trader. As a swing trader, you want to have your main trend from weekly, then your current trend from 4-hour time frame, no, current trend from daily, and your entry from 1-hour time frame. I believe that makes sense. Let me come again for swing traders. Swing traders, you want to have your main trend, look at your main trend on weekly, your current trend on daily, and pick your entries on 1-hour time frame. As a day trader, your main trend should be on the 4-hour time frame. 1-hour time frame should be your current trend, and your 15 minutes is your entry time frame. As a which other trader? As a scalper, 1 hour, of course, is your main trend. Then 15 minutes, 1 hour, 15 minutes or 30 minutes should be your current trend. Then you should pick your entries from 1 minute or 5 minutes. This set of people, I respect them. I respect them because I do not know how to stay. I don't know how to stay this patient, waiting for a trade on one to obey this noise and all of that. So that's why I said I respect this kind of people, these scalpers. So with that said, the next thing I'm going to look out for now, where is the trend headed? So I want to shrink my chart to look at it. Where's the major trend? Of course, it's moving up. It's moving up. So with the help of a trend line, you can determine that, or even with your naked eyes, you see that this price is headed to the upside. And we all know the nature of GBP. You try not to go against the trend because you may break your back when you go against the trend on GBP USD. So I'll just go ahead on all time frame to drop like a trend line. That's if you're a guy that use trend line. But if you're the guy that use levels, just with the use of psychological levels, you are good. You may not necessarily need a trend line, right? Of course, this is a valid one right here. This is a valid one. Because trend line, the rule of a trend line is 2 touches, 2 troughs or 2 peaks. Here is a trough, here is a trough, and here's a breakout, here's a retest, and it came down to this point. Most likely what is about to happen right here is price to shift upward to come toward this trend line and drop. And that may take days to happen. And that may take days to happen. All right, so now talking about my position on GBP JPY, what will happen? What would be my decision right now? Since we already know it's in an uptrend, then the current time frame is also saying it's in an uptrend. 4-hour time frame says it's in an uptrend. 1-hour time frame as a day trader says it's in an uptrend. So how do I make my entries on 15 minutes in relation to my psychological levels? So all I will just be waiting for on 15 minutes is for price to either get to 140, 140, then I'll take my decision, or get to 140.500 and I take my decision. But trust me, the major decision is for price to come to this around this level. Yeah, for price to come around this level. Watch out for candle reaction, rejection, then I go long. Yeah, that's what I would do. For price to come to around this level, watch for price, the reactions of candles there, I go long. I believe that makes sense. I'll go long. So that's plan A. And one thing, another very important thing as a trader is you need to have plan. You have to be plan A, plan B. Like for me, I have basically anytime I wake up in the morning, I have 3 plans. All right, 3 plans. If I'm to trade that day, I have 3 plans. I would either have plan A, plan B, and plan C. If plan A fails, I won't try plan B. If plan B doesn't work, I try plan C. If all of them fail, I'm done for the day. I'm not trading. I probably have exhausted my 3% or 3.5% that I'm willing to lose for that day. Now, because plan A fails, that doesn't mean I'm losing money on each plan that fails. No, probably may fail. Price may just shoot across my level that I'm waiting for and may not just respect. So that's a failure for me. That's a failing point for me. So I'll probably want to wait for the next one to come for the next opportunity to come. If the next opportunity doesn't come, I wait. I have my next plan. I have my other plan planned out. Then if that doesn't happen, I wait for the third one. Third one doesn't happen, I'm done for the day. All right. So I believe that has been answered. All right. So is there any question as regarding how I answered this, GJ? Okay. Matt Lars is saying I'm already long on GJ. Great stuff. All right. Farouk is saying you can't see what I'm sharing. I believe everyone can see what I'm sharing. The group is bubbling and you're saying you can't see what I'm sharing. Everyone can see that. Ella is asking, said, do you only look out for engulfing candle pattern? No, I don't just look out for engulfing candle pattern. I have a lot of other things that I look at. It could be a shooting star. Now, it's very important that you understand the concept behind shooting stars. Like whenever candle fail to the upside, it depends on the name you may call it. It's just the psychology you need to focus on. What I mean by psychology, whenever this thing happens, how do you react? What do they mean whenever it happens this way? Right now, if this happened on a key zone like 141 on GBP/JPY, that shows that buyers are getting exhausted at this level. It shows that buyers are getting exhausted at this level. What should you do? Should position to start selling. Join the winning team, as I always tell my people. Join the winning team, right? So as there's an exhaustion here, this weak failure shows that there's an exhaustion, and it's not just happening on the no man's land; it's happening on the key zone. You see another one right here, a failure right here. Buyers are failing. You can see the momentum to the upside is very weak, very weak, very weak. You really need to understand how candles work, what candles are telling you at each point of time. All right. So it shows that they are tired. What should you this day twice? Fail to downside, fail to the downside. So you should prepare your mind, start selling, which is what happened right here. There are more other examples. Like right here, you can see this failing. We have shooting star, we have morning star, we have engulfing. It can be either bearish engulfing or bullish engulfing. We have Heramai. We have other things that you should just look at. I may not remember all their names, but just look at how the candles are reacting on each level. Then you should. How many pips stop loss do I use? Someone is asking how many pips stop loss. Now, stop loss depends on the charts that I'm currently looking at. Now, since I only trade GBP/USD, let me just take it to GBP/USD. On GBP/USD, on the average, I look to risk 20 pip at a time. Okay, and generally in percentage, I want to risk 0.5% generally. So since I'm looking on risking 20 pip, I have to be very, very patient. I have to be extremely patient because getting 20 pip as a day trader on your stop loss requires a lot of patience, and that's really tight. If not, you're going to be stopped out the large number of time. So that's why I say you have to be patient. All right. So on this trade, the next thing I want to do, for example, hopping on this trade, I know GBP/USD is in an uptrend. As far as I'm concerned, it's an uptrend looking at things. But however, currently it wants to drop, let's say about 50 pips or something. 50 pips. It should drop to somewhere around 1.35500. But I'm not trading because you're currently on holiday. I'm having a timeout, so I'm not trading. All right. So it will get to 1.3600. That's a very good point to short. So if I short at this point, I probably won't have my stop loss a little bit above this recent high that it's made, which is 1.36163. So if you calculate from that point to this entry point, it should be 16 pips. Basically, I don't want it to be more than 20 pips because my risk management would not let me. Risk management, what did I use? I use baby pips position sizing calculator. Let me just show you real quick. So on baby pips position size calculator, I'm just going to click on this link and drop it on our chat box right now in case of those who want to like have access to the thing. Yeah, send it to everyone. So you may want to click on that. Click on that to save that URL. So I will scroll down. Since I'm an FTMO funded trader, a 100K trader, so I'm just going to impute 100,000 right here. Yeah, so that's 1 million. 100,000. So what I intend to risk is 0.5. Then the stop loss on average is 20 pips. So you have to have all of these things set. I'm sure if I unmute everyone and start asking how much do you risk per trade or how much do you intend to risk lose in a day, just a few of us will have that already determined, or a few of us would even stick to it. It's one thing to stick to know, to have it as a plan. It's another thing to obey it. That obeying it is a major challenge. That's why you need to always stay with people that are very disciplined in regarding trading. That's why I brought up the idea of an exclusive webinar, the one-on-one thing. All right. So if I calculate this on GBP USD, click on calculate, you see the standard lot size I'm to use is 2.5 lot size. So if this trade whipsaw, I'm going to be losing 500 USD. If the trade whipsaw, I'm going to be losing 500 USD. So already predetermined my risk. So if I'm to short on this trade now, GBP USD, so if I had short at this point, I would be in profit by now, which is 4 pips. So if I want to get on with 2.5, my stop should be somewhere around here, just as I've said earlier, 1.36161, somewhere here. Yeah. So if the trade goes against me, I should be losing some less than $500, which is fine. So if I lose $500, how many times would I need to lose $500 in order for me to be kicked out on the FTMO challenge in a day? Remember, in a day, there's a rule of $5,000 max daily loss. That is, I must not lose more than 5% of my account. So $500, $500, 5 times 5, that is, I'll need to lose 25 trades in a row for me to be out of FTMO challenge. And is that possible? It's almost impossible. Or am I correct? 5 times 5, that's 25, right? Yeah. I need to lose 25 trades in a row for me to be out of FTMO challenge, which is almost impossible. Now, if you are having 10 losing streak in a row, trust me, go and change your strategy or work on it. Okay, Mohammed Majesty said he's short already, he's already in profit. Like great stuff, great stuff. So once it moves, let's say somewhere around to, let me show you what I do for those who are already short. So if you're already short at this point, so once you come, let's say about 20 p profit, somewhere close to this point, break even immediately. So where would you move your break even? That would be the next question. Fantastic one. If you ask that question, your break even should be at least to be able to pay the broker some of their commission and break even in such a way that whenever market reverses or makes some noise, you don't get stopped out prematurely. So you have to break even and make sure it's very tight. Make sure it's very tight, somewhere around here, 1.35962. That's where you need to break even to. Not now, once it has made 20 pip move, somewhere around here. Okay, so that's a plan for those who are already in. So what was I saying? Okay, I was talking about risking. So if you have 10 losing streaks in a row in one day, man, you shouldn't even be having 10 trades in a row and you have all of them 10 losses. That's a problem. That's a problem. You have to stop trading, have an edge in the Forex market before you come on in again. Okay, I believe that's the answer. So let me just give room for hands that are raised. If you know you don't have any questions, just drop your hand, because I can see some people who had answered that, who have asked their question, their hands are still raised. So let me unmute this person. All right. I just ask someone to unmute. So if you're the one, just unmute and ask a question.
Hi.
Yeah, great. Nice to have you. What's your name?
My name is Doing.
Nice to have you. Where's your name from?
Yeah. I'm calling from Ibadan.
Great. So ask a question.
Yeah. So I want to ask if, how do we know if price has rejected the level?
Candlestick rejection, candle failure. Like we have here on the chart, like we have here on GBP, JPY. Sorry, this is GBP USD. You can see when price touch 1.3600, you saw the rejection. Look at candles as armies fighting. The red is fighting the blue. So whenever they get to this level, there are forces moving. So when you get to this level, imagine this candle from now. Let's just take this one as an example. Let me zoom in for the benefit of those using phone. Just a second. I'm trying to zoom in. Yeah, you see this candle that is printing right now on 15 minutes GBP USD.
Yeah.
You will notice something. Sellers are pushing this price down, but at some point this candle was once blue. It was one bullish, because blue on my candle right here means bullish and red means bearish. But let me just use color for those who are just joining in for the new Forex trader. So you can see there is a new rejection at this point. That simply means buyers came into the market to push it up a little. It may not be buyers, it may be those taking profit. But whenever you're in trade in the Forex market, if you are selling, when you close profit, you're actually buying. If you are buying, when you get to a certain point, if you hit take profit, you are selling. Just know that you are doing opposite of what you did before whenever your trade closes. All right. So with that psychology, you'll be able to prepare your mind and know what's actually happening currently at any point in time in your trade. So when you get in at this point, it was formerly bullish right here. Okay. So sellers came in, they pushed it down, they're pushing it down, pushing it down, pushing it down, pushing it down. So you can still see it's still a struggle at this point to break this level. Why? Because people are taking profit. Probably they are okay with what, probably they are scalpers, or they are okay with what they want to like get, or it may even be those guys who bought at this point. They bought at this point. They are currently selling. They are taking out. They are taking. Their trade is hitting take profit at this point. Hitting take profit. Hitting take profit. So it start forming bearish move. Start forming bearish move, and as a result, it gives you this rejection that, oh, people are not ready to like buy at this level yet. Hence, price starts dropping to the downside. So basically, what you just need to look out for rejections, weak. For example, when price moved here, you saw this weak rejection from the bullish. This one became bearish. This one was formerly bullish before, but sellers pushed it down, became bearish. So this just shows you that sellers are dominating the market for a short time. It may be a short while. If we take it to 5 minutes, you find out that this already is forming a very huge rejection. You see, if we even take it to the 1 minute, it will even be worse. I'm not saying you should take trades from 1 minute, but it can even form a downtrend on 1 minute already. You can see it's already forming a trend on 1 minute. So that's how you have to understand candles and how they form. It's very important. All right. So I believe that answered your question.
Thank you.
Yeah, great. So I can see other persons raising their hands. If you don't have any question, once again, please kindly drop. So Clinton, you asked to unmute yourself.
Okay, thank you very much, Jeffrey. Can you hear me?
Yeah, I can hear you clearly.
Okay, good day, everyone. My question is concerning your scaling in and risk management, especially when you are flipping an account. You say that you risk, okay, I watched one of your YouTube videos and you said that we should risk 10%, then divide it into 3 places.
Yeah.
Are you with me? Yeah, so if, but when I normally see your the number of positions you enter, that you can enter like up to 10 positions, 20 positions. So I want to know if you enter that full 10%, you split into 1%, then enter with 10 positions. And I want to know how that is different from if I just enter one position, 10%. Yes, I want to know the risk management aspect of why you break it down.
Okay.
I don't know if you understand.
Yeah, I understand. Yeah. It's very straightforward. Why I have to break it down, you know, a lot of people, they are really against, okay, why stacking? Why don't you just enter, if you have 10 lots that you want to enter, why enter with one standard, one star? Why don't you just go in with 10 standard? Now, you have to understand that we are working with limited risk. As an FTMO funnel trader, we are working with limited risk. That is, you shouldn't lose more than 5% in a day. So going with $10,000, what if it goes against you with 20 people? Going against you with 20 people, 10 standard lots, 20 pip against you, that is for each pip movement on 10 standard, that's someone help me out, that's $100 for each pip movement. So 100 times 20, that's a lot. So you probably would be down about 2,000 already, just 2,000 with just 20 pip move. That's a lot. So that's the reason why you have to break it down and split your risk, because splitting your risk helped me to know when I'm wrong. So if I'm wrong, I get to know earlier. So if I'm wrong with just 2 entries, I'm wrong. But if I'm right, you see 10 positions already at break even. And here's the concept. First, I have to break in. I already know that I want to risk 0.5% on as an FTMO founder trader. I don't want to go to flipping, because flipping requires, it's a very different thing. Because I know there are different people in the room. I don't want to talk about flipping. Talking about conservative trading and professional trading, FTMO. So on FTMO, I already wake up, I know I want to risk 0.5% of my account, all right? So I want to break it into 3 places. So 0.5 could be one standard, 0.5 standard standard lot size. It could be 1.5. It could be one standard lot size, depending. It could even be 0.75. Okay, depending on my current price. Maybe I moved it from 100,000 to 110 or to 105,000 thereabout. So what I want to do is I want to go in with 0.5, that is half of what I intend to risk that day. No, 1/4, 1/3 of what I want to intend to risk that day. I go with 0.5, for example. So when I get in with 0.5, I see that the market's acting with behaving well, or it's, and I put my stop loss, of course. So I see it's acting well. I get in with one standard, another one again. I get in with the same 0.5, sorry. And there are some times that my entries may not be right. For example, let's say I hop on this candle right here. On this candle, I hop on with 0.5. Yeah. Price start acting where it's moved down. So upon seeing moving down, on this is my psychological level, 1.3600, I added another position. Let's imagine these ones have not happened. I added another position. Then this third candle open, and I'm happy. Oh, it's moving in my favor. It's moving. Then the next minute, another candle open and comes bullish, moving against me. And my stop is somewhere 20 pips somewhere away, 20 pips away. So upon seeing this rejection, remember I already have two positions already, which is 0.5, 0.5. Upon seeing this rejection, wow, this is a nice one. I have another one again, 0.5. Okay, you see how it keeps coming in my favor again, But what happens if this guy shoots up to hit my stop loss? I'm only losing 0.5, 0.5. So that's why I can afford to have plan A, plan B, plan C. So now imagine I had entered as opposed to entering with just 10 standard lots here. Imagine I had entered with 10 standard lots. What do you think would happen to my psychology when price start moving against my international buyers? I'll be shaking. Because already from this point to here, I'm already losing. I'm down $1,000. I'll be shaking. And I only have $5,000 in a day that I mustn't breach. So hence the reason why you have to split risk. That's why anyone that messaged me saying, oh, I have a very profitable strategy. The strategy I've been working very well for a long time, but I don't know, just of recent, I'm finding it difficult to place any trade and stuff like blah, blah, blah. I just know it's risk management. Go work on risk management. All right. So that's that. I believe I've answered your question. So I just, if you can go ahead and ask your question. All right. So why he's not there, Daniel, I just asked you to unmute. You can go ahead and ask your question. So we have done 1 hour, 15 minutes already. So by in 15 minutes time, I should stop this webinar and allow us to have like one-on-one conversation and talk about how to improve next year on our general platform. All right. So Daniel, go ahead. Okay, your mic is not on. I don't know, maybe for some reason. Let me ask another person to unmute. So go ahead, take it away, ask a question.
Hello.
Yeah, great, nice to have you.
Okay. My question about this chart is that those level, can you hear me?
I can hear you clearly.
Are they like psychology level, Abby?
Where are you from?
From Ocean State.
Okay, great. So what's
Okay.
the
Those level that you draw out,
yeah,
the horizontal support and resistance. Can you hear me?
I can hear you clearly. There are psychological levels, yeah.
Okay. Now you can see that the market is on the bullish movement. Let's say and now is retracing. Let's say now break that. Hello.
Just go ahead, I can hear you.
Okay. Now you can see that the market is at bullish level, like it needs to feed that bullish void. Assuming now break that purple line, the resistance level over there, and now come down. Can we call it a structure break?
The structure breaks. Yeah, I understand you are talking about a different strategy. Not a break, because for me it's still going to it's still an uptrend market. So for those guys who are selling, you are only trading off of those guys who are taking profit at that level. It's an uptrend market.
Okay, okay.
Yeah, it's better to buy.
Okay, I have another question.
Okay, go ahead.
Okay. Like I did one analysis yesterday after the break of structure. The on 4 hours time frame, Euro USD
On
price is correlating
okay, on Euro
and that moved
USD.
to 15 on Euro USD.
Let's go ahead and check it out. Okay, on 4-hour time frame, what did you say happened?
Like there is a breakout of structure there, breakout of trend line.
To what side?
Uh, I think I can't figure out, but move to 15 minutes. You can figure out this symmetric triangle
Okay,
after the break of structure.
what happened? Okay.
Then when we have this symmetric triangle, it can break to the downside a bit after bullish movement.
Okay.
But what I saw yesterday is that the price keep moving upward. Does it go against the rule, or we can say it's still part of it?
I'm laughing. This is for anything can just happen. Yeah, that's the reason I'm laughing.
Okay.
Like if you have
Because
yeah, okay. Now let me just explain. Just kindly help me to unmute. Just help me to mute. Let me explain. Let me just talk about that generally.
Okay.
In trading generally, whenever you have, let's say like a pattern that you follow that pattern strictly. You don't look at any other thing. That's why it's very important you focus. But however, these teachings, they don't teach us that way in most places because they know that if they tell you that, you probably may not be consistent in no time and may not want to pay for courses again. But that's just the truth. You don't need too many things to focus on. You just have to focus on just one pattern. Just as you said, if you are focusing on a symmetric triangle that you want to trade, that is, people can also call that, what is that? Is it peanut? Peanut. Some people call it peanut. Talking about flags, maybe like a flag pattern, all of this regular pattern, zigzag, all of these things. You can just focus on just one and you keep trading it over and over again, over and over again. Now, talking about Euro USD, what I can see here, it's in a very strong uptrend. You shouldn't even try selling this market. It's only trying to like gather strength, retesting right here to still shoot up. You're gonna just mark this word as I said. I don't trade this pair anymore, but just check whatever I'm going to tell you now. You can check it on a later date that it's a strong buy move. Any sell that is going to happen is just a small retracement. And when I mean this buy strong, it's very, very strong. It is very, very strong, guys. It's not even going to like, even if it's retracing, these sales are just going to be very choppy. Very choppy. Now, you had a pin asymmetric triangle. Maybe this is what you said you're looking at. Maybe you're using trend line, stuff like this. I don't know how this even makes sense. But I can't see anything here. All I just see is structure, price coming to reverse psychological level. Psychological levels are somewhere around here. There's a psychological level here. Two to 5. See how price touches this level and bounces off. So if I was trading this guy, I probably would just be waiting at 1.225. The next level is 1.230. 1.230. 230. Yeah. So that'll be the next level. So that's what I'll just be waiting for. But I know it's a very strong uptrend. So without any indicator, let me shrink this indicator. You can trade based on just using psychological levels only, without any indicator. Let me add just a few more and explain what you should be expecting, what we should be looking at for on Euro USD. Like this. So since we already have this level that is sure is holding, then what else? What else are we waiting for? Just wait for price to get to a level that is certain. Like we go on 15 minutes now. Let's see what's going to happen. This is on 15 minutes. So how price got to 1.22500. It dropped down to this next level, rose again to this point, struggled at this point, yeah, moved up. Yeah, it won't get to this point, struggle here a little and keep going up. That is what I'm seeing. I'm not seeing any sign of sales in any time soon. It's only GBP USD. I'm only seeing a little bit of drop to the downside based on how GBP USD move. I'm seeing, let's say, like 30 to 50 pips drop, maybe 30 to 50 pips drop to somewhere around maybe here, then before it continues to the upside again. Yeah, so that's what I'm saying. But on Euro USD, I'm seeing a buy move. A buy move. All right. So I believe we have answered all of the questions. Anyone else? There are a whole lot of hands raised here. We have about 25 hands. I believe how many? So let me ask numbers. So Sintero, you can go ahead and ask your question. Tell us your real name and tell us where you're joining us from.
Hello, good afternoon.
Yeah, good afternoon, brother.
Yeah, my name is Tony from Port Harcourt.
Okay, fantastic. Nice to have you.
Yeah, I would like to ask psychological levels, how does it work out on indices? Can you please recap again on how it works on indices? I know you did such like US 30.
Okay, US 30.
And you go back to gold again. Let's see again. How do you just, when you come on the chart, you just pick for the next whole numbers behind or in front? I know this is gold.
Yeah.
Okay, well, after we try US 30, let me see how it does. Thank you very much.
Wait, please, can you help us to mute? Let me take one more question. I'll answer all of them together. So this is German 30 that I want to use as an example. Just one more question. Let me just unmute one person. Who should I unmute now? Michael, Michael. Tell us your real name and where you're joining us from.
Hello, can you hear me, please?
I can hear you clearly.
Okay, thank you, Jeffrey. My name is Olulope. I'm calling from Chicago. Thank you for taking time to educate us more on this very important aspect of Forex. Now, my question is, number one, how do we contact you for the one-on-one exclusive training? I think I'm going to need that for flipping, very important. That's number one. Number two is stacking. How do you react when stacking is going against you? And how do you know when you need to start stacking your trade? Thank you.
All right, great. Okay, so I said I'm just going to add one more question to that. So let me start answering. So to start with stacking, how do I know when to stack and how do I know when to react? How do I react when it's going against me? Okay. So first, for the first guy, he asked like I should do a psychological levels on index. So I just pull up one, which is German 30. I believe it's closed because of the holidays. Let us mark it up. This is DE 30. Maybe depending on the German 30 is running on some brokers, but here I'm using IC market. I don't know why it's not running, or am I not getting the name? I know German 30, they call it DE 30. They are off. You can see IC market, none of them is moving. The bid and ask price, they are not responding. So it's because of they are probably closed. So let me just go ahead and use these guys. Let me just use this one just for you to understand the concept. So the first thing I did is I looked at the current price as where it stopped. It stopped at 13,725.50. Yep. So I'm just going to look for the nearest whole number. Looking for the nearest whole number is just that. Okay, it's moving actually. It's moving, but it's very, very slow. It moved. It was 13,725.50, but now it's not 13,725.00. It's moving. My bad. So just to know the next one, you just calculate from this level, calculate 50 pips to the next one, 50 pips. And since its EDC is 500, so that's just 50. That's your 50 pips. So it's 500. So I'll just go to 13,750. That's the next psychological level. Yeah. So 13,750. So you just go ahead and edit. I believe this answered the first guy's question. So it's very simple. So our brother, this is an answer to your question. So the same thing, it happens in everywhere. The same thing, the same trick applies to everybody. Everything, all pairs. Just know the current market price, look for the nearest whole number and calculate 50 pips difference from that point to the next one. So you plot it right there. So if you keep calculating, you find out that they are all 50 pip difference, or you can call it 500 pips different because it's an index. See, it's 500. Yeah, it's 500 right there. So that's how it works. So let me just add a little more so we can relate it to the current price, just as we did for all other ones. I know you want to have that, see me talk about that too. So I love German 30. I love all that pairs. But German 30, I just love the way it moves. It moves like it moves very, very fast. And that pair can make you rich. And it can also break the bank. So since the last one is 13,665, then the next one should be 660. Like that. Oh, that's too tight. No, 37, 13,700. It should be 13,665. It should be 13,650. 13,650. Sorry, my bad. 13,650. Whoa, I lost that. It's a little bit confusing, right?
13,600. That's my 13,500.
Okay, 13,700. Okay, it should be 13,600. Yeah, yeah, yeah. Why this huge gap? That's what I'm wondering.
13, the first one is 13.
So it's 13,550. 13,550. Like that. This is how this stuff works. So if you want to keep adding, it's different. Just keep adding 50-50. So to cross-check whether I'm correct or not, there are times, because it could be sometimes confusing. Just check if it's 500 pips, you are correct. If it's 500 pips, you are correct. Correct. Oh, this is supposed to be, this is the confusion here. It's supposed to be 13,660. This is the confusion here. 60.0. Yeah.
Sorry, Mr. Jeff. Some people got disconnected from the Zoom session and they are messaging on the Telegram group that they are trying to get back in.
Yeah, and DM, there's a lot of people here. They should just click. Kindly help me to tell them to click on the link again, and it's open. It's no longer locked. It's open. I left it open. Thank you.
All right.
So there are a whole lot of them waiting on the waiting room. So keep adding them again. Yeah. So that's how to add it on German 30. So the same rules still apply, just the same way we talked about. So you saw how price, when price got to this point, see, price getting to 13,750, price dropping right there. Getting here, the noise in mid here before it started going up. So upon the break here, that should signal an entry for you. Break to the upside. Even here is a psychological level. Here, psychological level. Everywhere here, tested this point before dropping. Now, how would we react to this current market price? Since we already know it's a breakout, if you put a trend line from here, connecting here, you find that it's a breakout to the downside. So already this is forming another new trend. Remember, I said on average, trend line can only be tested twice. On average, twice. The fourth one is either a break or it continues to the opposite side. All right. So here we have one touch. This is the second one. So here should signal another drop. So this is a high. This is a high H. This is a lower high. This is a lower low. A lower high is a lower low should come to form here again. A lower low should come here, somewhere around here. So from here, we should have another test of the trend line. Then we have the final one. Then this is the last one that forms double bottom. Sometimes it could form double bottom to give you a divergence on some indicators, then bam. That's how market move most of the time. So back to the guy that was asking question regarding my risk management. Sorry.
I miss the fact that. Oh, sorry. No, no, you. I forgot to move.
All right. So the guy that asked a question regarding how I add more positions. Okay, it's very straightforward. I add more position by just simply looking at the levels. What are the candles doing at that level? How is it reacting? How is it reacting? That's what I just look at for. So if it is reacting based of, sorry, I'm trying to like reply to people in the group, they want to join on. So depends on how it's reacting. For example, let's say I'm trading JAMA 30. Okay, so when price gets to this point, I'm short. Of course, I can't even be short in this market because it's a very strong bullish market. So let me go to the market app. Let me tell you from experience what I've done. Okay, so let's say, for example, like yesterday, I had a position right here. I had another one and I had another one right here. So I probably will have another entry if there is a successive break above 1.34500 here, which is this candle that did this for us. This one. So upon this candle move, I should have another entry 1, 2, 3. However, this previous one I had at this bottom will be at break even somewhere around here because this must have fulfilled our 20 pip move. So upon 20 pip move, I first make sure I pay my broker their commission, or at least protect my capital that I'm coming in. I want to run risk free. I don't want to risk 20 pip anymore. I want to run risk free. So that's the first thing I want to do. So upon here, if I'm able to break 3 of them even, I'll enter 3 new positions again. So that's why you see a lot of stacking. So already at this point, I should have 6 positions. 3 at break even, 2 having stop, 3 at break even, 3 having stop losses. So that stop loss is such that even if the market retraces against me, I'm not going to be losing anything. I'll make sure the profit I have, there are some market conditions that I'll make sure the profit I have secured. I'm going to teach you all of these things in the live session. The profit I have secured will be able to cater for the ones that I have opened. You get? Yes. So it's all planning. It's not every time I just have to enter just once. I have to enter like I have all my entries stacked at once. No. There are times I could have 2 initial entries. So even if it goes against me, how do I manage that? So even if that 0.5 goes against me, I know I'm not losing something. I'm losing something between $250. I'm losing even less than $250. So that's how to maximize your profit and minimize your risk. So I believe that I've answered that well enough. So if there's any question, you can ask. Okay, more hands are being raised again. Salim, I just unmuted you. Go ahead and ask. Salim, we can't hear you. I can see your mic moving. Tell us where you're calling from and your real name. So we are finding it difficult to hear you, Salim. So let me just unmute Javel Wash. So over to you.
Yes, hello. Can you hear me?
Yeah, can hear you.
Hey, how you doing? My name is Javel from New York City.
Great. Next to have you, bro.
I watched one of your YouTube videos where you talked about at the beginning of the week on Monday, you put the high and the low for the week. I just wanted you to explain how you use that throughout trading, because I've been back testing it a little bit and I'm just trying to understand how to use it throughout the week, the high and the low that you set from the start of the week.
All right, fantastic. Yeah. Okay, I'm going to go through that just one more time. So is there any other person who wants to ask a question? Someone else. Let me just take 2. I want to be taking 2 so more efficient. OJ, take it away.
Hey, good day, Jeffrey. I'm from Jamaica. I'm Daniel.
Yeah, Daniel, nice to have you, bro.
All right. My question was, how do you identify your psychological level for each different currencies that you trade?
All right, I've been going through that over and over again. First, I said you should look at the current price and you look for the nearest whole number to the current price. That should help.
Nearest whole number, and you said it's calculated 50 pips away from the other one?
No, it's when you get the nearest, it's when you get the first whole number, then you start adding 50 pips or minusing 50 pips.
All right, all right.
Please kindly let me answer our brother Javel from United States. All right, so straight to the question that he asked. He's asking, how do I determine the high and low of the week? All right, because that stuff works a lot. So as a day trader, I go to 4-hour time frame on my GBP USD. So if you notice these two green line that you see right here, these two green horizontal line, that is what it represents. That is my high and the low of the week. So what that simply helped me to do, it helped me to know the weekly directional bias. Yeah, there are times that it fails, but I'm glad to announce that most of the time it works, and it works. So let me just zoom in without further ado to explain a little bit faster. So the first thing that you want to do, you want to look for the first 2 4-hour candle to form on the 4-hour time frame, first 2 4-hour candle. So what you want to do a MetaTrader for is you want to like enable your period separator, which is Control Y if you're on a MetaTrader 4. So you have to first note the first 2 4-hour candle. So the first 2 candle as we speak right now is this red one, bearish one, and this blue one. So you have to note the highs and the low. Put a line on the high, put a line on the low. So let me delete these. So this is the highest point you ever got to, this point right here. And this is the lowest point you ever got to. So that's why you can see this green and this green line right here. So if any 4-hour candle breaks beneath it, it's going to be a downward trending market for the week. If any 4-hour candle breaks above it, it's going to be it's going to be an upward trending market for the week. There's an exception. There are times that now you would notice that it should be a downtrend, right, for the week, because we have this 3, 4, the 4-hour candle breaking below. So upon this break below, you saw this gigantic one that came down, and hence you started having another retracement. So as far as I'm concerned, from tomorrow, if there's not going to be holiday on Forex pairs, you should be looking to short, because most of the time it will come to retrace, test this high, and from here it should drop to the downside. Sometimes it may even drop somewhere around here and move up. Yes, there are exceptions sometimes. All right, so let me just give you one more example. Let me give you one more example to like corroborate what I just explained. Let me show you the one that happened last 2 weeks. The one that happened last 2 weeks, it's kind of funny because it did both sides. Yeah, this is the exception I'm talking about. So we have first 2 4-hour candle. This is the first one, while this is the second one. The highest point of this one is the highest point he ever got to, right? And this is the lowest point he ever got to. These are the first 2 4-hour candle. Remember, guys. So this is the first one. This is the second one. All right. So we are going to note the high and the low. So upon the breakout, this 4-hour candle broke down. So hence we should be in a downward trending market. What happened? The reverse happened, which I believe this happened as a result of holiday. Yeah. So this is what is about to also happen here. So we had a break to the downside because the structure has already told us that we should be moving upward. All right. Remember, I told you guys earlier, it's an up market. It's an up market. That's what the structure is saying. So we should be moving upward. So that's the reason why this guy failed in this principle. But you can go ahead and backtest and check every other ones. It works like crazy. So let me take you to the last 3 weeks. Last 3 weeks, the first 2 4, this is the first one. This is the second one, correct? So this is the lowest point you ever got to, whereas this is the highest point you ever got to, correct? So upon the breakout, this is the bullish one that broke out, right? Upon the breakout, what happened? We had a retest. Upon the retest, this shadow came to test this point. Upon testing, bang, we had an upward moving all through the week. That's how that works. So you can go on and backtest, see what I'm saying. You find value in what I'm saying. All right, so here's another one again. Here's another one again. Here's another one again. Bearish one, bearish example. Just give me some time. I can see the chart box. Just give me some time. I'm going to explain more. Yeah, this is the first candle. This is the second candle. So this is the lowest point you ever got to, and that is the highest point you ever got to at the top right there. So what happened? This first candle broke out to the downside. So we had a retracement. This is what I'm saying, the other one. Just as we had a bust to the downside. So this retracement happened on Tuesday, Wednesday, but on Thursday, things changed. So upon touching right here, yeah, it formed, this is a, what should we call this? This is a morning star, huge morning star on 4-hour time frame, bang. We had this drop to the downside. How many people? How many people? That should be somewhere around about, if you're able to catch this, that should be somewhere around 300 pips, which is not so common on Forex pairs. Yeah, 300 pips. except gold. So I believe that has been answered. So just go ahead and do your back testing. All right, so Jevel, I believe you understand what I'm saying. If you don't understand, let me know. Let me know in the chat box. Let me understand. Jevel, do you understand what I'm saying? You can unmute and let's talk. If you get what I just said. Let me, it's Jevel.
Yes, hello.
Yeah, did you get what I said? What I just?
Yeah. Yes, I see what you're saying. It makes sense now.
Okay. So,
Thank you.
yeah, you're welcome, bro. So who else? We are officially done with the presentation. It's just question and answer segment. I see we currently have 184 still right here. Toberex, let me answer you now. Yeah. Toberex. After this, I'm going to answer Salim. Salim, it's enough. Yeah, bro, stop raising your hand. Like you even answered, I asked you to unmute the other time. So Toberex, you can go ahead and unmute yourself. Okay, since you are not unmuting, so let me just go ahead and give the control to Salim.
Hello, sir. Sir, can you hear me, sir?
Yeah, I can hear you now. All right, let's hear you out. What's your name and where you calling us from? Hello? Hello?
Can you hear me, sir?
I can hear you clearly. I believe everyone else can hear you too.
Hello, sir. Can you hear me? Okay. So okay, I'm Toby Rest from Enugu, Nigeria.
Okay, fantastic.
So I actually have 3 questions to ask. Can I go ahead?
Okay, rush it, please.
Okay, so my first question is drawing your trend line. On which time frame do you draw your trend line? Do you draw it from 4 hour, 1 hour, or on 15 minutes? Because I noticed that if you draw your trend line on 1 hour, if you come back to 15 minutes, you notice that it's not following 15 minutes trend. And you'll be seeing like a lot of lines in 15 minutes time frame that might confuse you.
Just go ahead and answer questions. Okay, I understand. Okay, go.
Okay. So my second question is, when trading trend breakout, do you trade immediately it break or on the retest? That is my second question. The fourth one has already been asked. The third one has already been asked. Sorry, it's about the low and high of the day. Someone have asked it before. So is this to that?
All right. So after this one, let me take Salim. I'll answer the two of them together. So Salim, you're asked to unmute yourself. Go ahead, Max.
Good afternoon.
Yeah, good afternoon, brother.
I'm Salim from Lagos.
Man, I can see Lagos guy. I can see you want to kill us with the emoji raising of hand.
No, I have to, like, my privacy setting. The microphone was not on, so I have to on it. Check the settings and on it again.
All right, go ahead.
Okay, like my question is, can you kind of tweak this strategy with your strategy? Like, let me say, for example, break a retest. Can you tweak it with this your strategy?
Yeah, for sure. If tweaking, you mean like, what do you mean? Adding efficacy.
Like,
okay.
Like like adding efficiency, like trade it with this strategy, this psychological points, and break a retest just to add confluence.
Yeah, that's what I do. That's what I do.
Okay, and next question: will you be having like meet and greet during January, like New Year? Because I missed that day. This is Christmas on. I really wanted to come, but I was kind of busy.
Okay, meet and greet. I'm not sure about that. I'm not sure. I don't think so. Because it'll be a very tight period right now.
Okay. Thank you.
All right, great. So to answer the first guy's question and also to answer Salim's question, so let me start from the guy who talked about trend line. Now, if you're placing trend line, it's that function, that problem, that bug you're talking about, placing trend line on 1 hour time frame, and when you go to 15 minutes time frame, it will shift. That happens only on mobile MT4. Everyone will agree with me. If you agree with me, drop number 1 on the chat box. It only happens on mobile MT4. It's not so common on your laptop. It's not common on the laptop. So that's why I always advise you use TradingView on your laptop, or you use MetaTrader 4 on your own laptop, or you can use MT5. All right, MT5 doesn't have that problem. All right, on phone. I mean on phone. So that's that as regarding that. Then the second question you asked, if I remember clearly, you said how trend line do I enter immediately on the break or retest? In trend line trading, there's a book that dropped on the channel. If you want to do your due diligence, read that book. It's very, very important. You understand? There are two styles, there are two strategies trading. You can either trade based, there are two types of trend line breakout. There is break and retest, there is immediate break. Example of break and retest, let me show you real quick. Here is an example. The one that is very common is break and retest. Immediate break is it's not so common. And even immediate break is risky. Let me go on 15 minutes time frame. So you can draw trend line on any time frame. It does not, you don't have to, any trend line you drop, it should reflect on all time frames. So asking where you want to like have it doesn't make sense. So now look at this one. 1, 2, 3. This is a trend line, right? The condition of having a trend line is at least 2 troughs or 2 peaks. So this is at least 2 peaks, right? So upon this here, this is a break. It's retested, broke out again, retested, bang to the upside. This is a break and retest. You could either trade this path. Let me look for immediate break. Immediate break, the one that does not even wait at all. For example, here is a small, if you want to trade the counter trend, like for example, immediately and it does not retest, it just keeps going up. That's an example of immediate. So those are the two things. So you could either use any one of them. You could use any one of them. But the one that is more common is break and retest. Break and retest is the most commonest one. All right, I believe that makes sense. So that would be it for now. I believe all questions have been answered. And someone is really asking, let me go through the, Mr. Idaosa's question. But if you add more position as price goes on in your favor, number 1, where would you place the stop loss of the new position? I'm going to place the stop loss of the new position I'm adding on my recent break even for the last 3 positions. I believe that makes sense. All right, 2, won't it reduce your profit since you are adding position later on? Yeah, it will. In fact, if it's going against me, it's going to reduce my profit. But if it's in my favor, it's like a multiplier effect. I'm going to be making like ×3 times like that as it keeps going. So I believe I've answered your question. Someone is still raising hand, like Surf is still raising. I believe I've answered Surf. Tolu Dr. Michael is asking, how do I have white plain background on my MT4? I just did settings. Press function F8 on your laptop on MT4 F8 to bring out your settings. No. Maybe just right click and come your properties. Here you do your settings. Come to colors. You can tweak everything. Your background turn to white. You should have that function. What else? Dr. Akwasi Wiafi said he has a question, and you have really been active here. Let me give you an opportunity to ask this your question. All right, let's go. So you can unmute. All right, ask.
Hi, good afternoon, everyone. Good morning, good evening, depending on where you are. My name is Dr. Akwasi Wiafi from Ghana. I hope you can hear me.
Yeah, I can hear you clearly.
All right, so looking at the TDI, I realized that it kept changing bias. How does that affect your trading? And also, I hope you're going to make an announcement about the live trading sessions for those who want to join before we go.
Yeah, I'll make the announcement when it's time, not here on this webinar. I'm going to drop it on my channel. I'll talk about it on my Fire Pip channel once it's January, when we are live. We are ready to go live. Yeah. So thank you, Mr. That is Dr. Akwasi. Great. Talking about the TDI changing bias, I already told you this is has an extra confluence. It is not now. Indicators are not meant for analysis. That's where people get it wrong. Do never use indicator to analyze. Indicator should just serve as an extra point of confluence for you. That's why you have to understand how price work. Price action is key. Understand how price work. Once you understand how price work, use indicator as an extra confluence. So hence, I use this indicator just on 15 minutes because I'm just waiting for any extra cross. Like here, if there is a cross to the upside, then that's an extra confluence for me. I'll just go long. Here, if there is cross to the upside, I go long. Here, if there's a cross to the upside, I go long because these are my key levels. Right here, see this cross? I don't take every crosses that happen. Like this one, will I take it? I don't think I'm going to take all this noise. I don't think I'll be here. I don't think I should be here. I don't think I'm going to be here. Just taking this one. I don't think I'm going to be here. All this noise here, crossing up, down, no. I don't think I'm going to be here. Stuff like that. All right, so that's how it works.
All right, thank you.
Collins asking, please, do you have an academy where I train people? No, I don't have an academy. All I do is free on the Telegram channel and in discussion group. They are all free content that I give out. But based on popular demand, like one-on-one, people want to see how I trade. They want to trade with me live and also make money on my the same way I make money on FTMO live trading. You want like join on one-on-one section is an exclusive webinar, which is just $50. The last time we held. So I'm going to be announcing when the next one is going to kick off, January. So immediately after the holiday, we should be getting results. You should be getting an announcement on when we are going to be getting started, and which is going to be open to everyone that comes first. Someone is asking, can I have a Telegram link? Like, you should already be there. Let me do that. Telegram link. Just go and search at Firepip Signals. But I'm going to put the link here. So once you click on the link, it should take you to our page. So yeah, that's the link. Use this link. Just click on this link now. It should take you right there. It should take you to Chrome, and from there, add you to the group. I'll just go ahead and repost it once more. Because messages just cover that up. The high and low of the week works on GBP USD, not on gold. I use this strategy on GBP USD, not on gold, please. Not on any other pair. So that's it for today's class. Thank you guys for coming. I appreciate you. I'll say, remember to keep it patient, be very, very patient, because trading basically, it's more of patience. It's not about how many trade you place in a week or how many trade you place in a month. It's a patient game. You have to wait at strategic point, wait for price to come to you, not you going to price. All right. So that's it for today's meeting. I say thank you guys for coming around. Thank you to Lope. Thank you, Michael. Thank you, my co-host, the guy that has been helping me to admit people in, which is Mr. Adesui. Say thank you.
You're welcome.
Yeah. So Mr. Patrick, thank you guys. Thank you for joining me. All my guys. So bye for now. If you have more questions, you want like joining into your other one-on-one session that's going to be coming up, promise to make it very, very fun and interesting to all of you. All right. Thanks to every person who joined this call today. Yeah, bye for now, guys.